TGIF. TGIF, everybody. I got a haircut. Not in my account, although I've had many haircuts, a flat top, a mohawk in my trading accounts over the years, but just a trim TGIF, everybody. Shahab TGIF. Brock's not here. Okay, so enough of that FaceTime and face. Let's talk about what's happening here. How you doing, Mohammed? So, I shorted the S&Ps a couple of times this week, and I'll tell you the difference between when a market might be turning at the minimum consolidating, that you could, at good entries, even though the trend hasn't really changed yet, still have, 20, 30, 40 pip moves in your favor, even though, you can't verify a top was in, because that's a change from being run over trying to short this kind of stuff. Okay. This stuff, you probe it, you get run over. You probe it, you get run over. But, in the last few weeks, there have been some shorting opportunities that have worked. This is one of the bigger ones, unless you go all the way back to January. And we almost got to the speed line here. All right. So I have a few speed lines to pay attention to. And, you know, this could have been it. And if we start taking out this low here, we could continue to correct on the downside. The next speed line I have is pretty deep. I have to extend it out. Well, this one comes in, and going to come in right around 3,100, which is, all the way back to the throwover line. This is your throwover line, right? The megaphone line right here. I know I have a lot of lines here, but they meet at 3,100, 3,085 in there. Initially, I'm thinking 32 and a half, something down here. It almost looks like these speed lines will. Here's, people ask me, Dale, how do you draw your speed lines? And I just say, use your imagination. So I didn't have this one in, but
I
you
thought
just
you
take
would say
low
randomly.
randomly. Yeah, yeah, just be creative. I mean, here's a low. Here's a low that was important. It pulled
New
back.
form of art, right?
It is. It's if you guys want to sign up for the speed line class, there isn't one. So just try it on your own and connect different points, and
Did you
have a
read did
good
you read
buzz
Ziggy's
on.
joke?
Oh, what was his joke?
Just read it.
A vasectomy? That's when you really have skin in the game, huh, Zig? Anyway, no, I didn't have to, because I was such an active guy in the 70s and 80s. I just went sterile, so I didn't need a vasectomy. Anyway, draw some lines off key points, and you'd be amazed how sometimes they end up being a place where the market could react. Um, it still works for one of the functions. And Blake is back. So, I remember saying to Blake yesterday, what was it? It was the peso. I said it had a heartbeat. That was down here. So, the peso is saying, you know, potential of risk off, right? So, it's come out of the wedge. We'll see if it holds. And, I think I've talked about enough things. I still think there's 100 points left on the downside in euro. I don't think this is a bottom. This is still a pretty negative week. nothing on a weekly basis. Although next week it could turn good if we close back over 108.37. So I'm thinking 100 lower, 107-ish in there, and par 22 or so in the Dixie. I mean, they've done nothing wrong. And here's one more thing, the weakest currency has been Aussie. And on the DSI, I think it's sub 10. It might even be single digits. And
Let me pull that for you and I'll
yeah,
tell
I
you.
think it is, so I mean, we could still work lower, but getting back above 620 is kind of like a throw over that we had here. So getting back over 620
10.
would look pretty good. 10.
10.
Okay.
Yes.
Okay. So I wouldn't say there are a lot of, it's probably one of the
Still, 10
hardest
is a very low reading.
Yeah, one of the hardest currencies to buy because of China and Corona, etc.
By the
Anyway,
way, Palladium
ahead.
3 consecutive days at 90 and above.
Wow.
Just mentioning extreme levels, and gold at
Yeah.
93 yesterday.
You
At the
know what
close.
else is extreme again, Stephen? I
You know
want
what else
your
is at 93? The dollar index.
yeah. It's amazing.
Yeah.
And what I'm interested in is look at where we are in the gold silver ratio. We're about to looks like
There is
we're
an
going to
even
make
more
new
interesting
highs.
ratio. There is an even more interesting ratio,
Oh,
which has
still 61.8.
which has long-term value, in my opinion.
What's that?
Have you had a look at the palladium silver ratio?
No, I haven't. Maybe you could show that in here.
Yeah, at the highs before yesterday, you needed 155 ounces of silver to
Wow.
buy one of palladium. Just
And I
just
think it used to be more like 10 to 1. I'm just guessing.
just to put it in context, that was in 2011 at 15, 16.
See, good get. Yeah. See, I thought it said 10. Yeah, that's amazing. Wow. Yeah. So, metal arbitragers are having a great time right now with what's happening in some of these exotics.
Yeah,
So,
they've gone vertical, so I
yeah.
think they are very close to a big turn.
Okay. Maybe we'll get Blake in before you take over.
Oh, I'm here. I'm here.
How are you, bro?
Good. Sorry, I had to
It's
scurry
okay.
around for a little bit. I had some dog issues, so I had to deal with. One of the benefits of working from home at
It's the
4 or 5
best.
in the morning. Well, 6 now, but So hey, good morning, Steve. Good morning, Dale.
Good
Yeah,
morning, Blake.
the
Good morning.
gold has really surpassed what I figured we were going to do in this current climb. Let's take a look at gold really quick. Last week, I was expecting with the triangle breakout. Let me find gold really quick. I was expecting a move to 1619, and we just continued higher. And matter of fact, if you look at Forex Analytics and you just look at the analysis from last night, it even surpassed what I was thinking last night when I wrote we closed at the 1619 level resistance, but pullbacks continue to be shallow, which could put the 127% extension of the triangle at 1634 in play as the rally continues. Yeah, we surpassed that.
I do recall, Blake, though, a long time ago when we were hundreds of dollars lower, you had a technical formation that said 1700 measured.
Yeah, that was back here at 14 on the break above 1490, and that's still the
yeah. There you go.
Target is still valid, and that takes us to 17. That's like another 100 points away from where we're currently at, to 1740. So that's realistic, and it's you look around and you're like, well, what is that going to move via the FX? Because typically, and what we've seen for the last 20 years is the correlations between the yen and gold were very strong. I'm not saying that the yen can't strengthen from here alongside gold, but this week really disrupted the way you trade the yen, in my opinion, moving forward. And so what's going to be really interesting about the currency market is how, if the true test to the yen will be if the S&P sells off, and you know, and what I'm looking for is to yesterday's lows. I mean that, you know, we're a ways away from there. You know, about 30 points away from there. But if we break through yesterday's lows, what does the yen do? Does it strengthen or does it weaken? And that's been a big topic of conversation between you know, those of us that are, you know, chatting around in the chat room. We're like, what does the yen do? Because I'm in the camp that old habits die hard. And so if we see some risk off in the markets, let's just, you know, this was the conversation we had yesterday on the daily roundup webinar as well. It's like, okay, well, the market strengthens or the downside strengthens. Does the yen really strengthen at all? And if it does, what's the extent of it? My 2 cents is if we, let's just, you know, humor me really quick and say the S&P sells off 100 points from where we're currently at. Let's say we head to 3230, you know, so down here from 3330, we go to 3230. You know, the yen, if the pullback is minimal, meaning the dollar yen just, you know, slumps to 110, 110.50, you have to be a buyer. You have to be a buyer then, because that means the dynamics of the yen is changing. What I think is going to be more important moving forward is how the euro responds. Because I think the euro, being the funding currency of choice, is going to be the currency that actually strengthens in periods of risk off. Now, one of the other comments that I made last night, and I'll tell you guys now after the fact, but it was in the chat room, is we had economic data that came out overnight. So if you look at the data that was released overnight, we had a bunch of Eurozone PMIs. Okay, now the German manufacturing PMIs came in stronger than I expected, which I was surprised. French weaker, we're now below 50. A lot of the services PMIs actually picked up a little bit, and so generally speaking, it wasn't bad data. Too bad. I mean, relatively speaking, based on what projections we're pointing at. The point I was trying to make last night is, even if it was weak data, I doubt we'd see much movement in the euro. And you know what's interesting is even the better data that we saw overnight did not produce a big move in the euro. It pushed up a little bit, but we came right back down again. So hear me out really quick and hear this theory. If you look back the last 20 years, you know, I'm going to ask you guys this question, and go ahead and write in the chat box. How many of you guys have been trading the FX market for about 20 years? Just say I have, or yes, or, you know, you guys have. Okay, so only 9 from FX Trader. Pete says I have. Okay, all right. So for the last 20 years, the FX market has not been responsive to Japanese data at all. It's a funding currency. So whenever economic data would come out in Japan, everybody would be like, you know, it could have been 5 years ago or 10 years ago, or, you know, 15 years ago, people would be like, oh, hey, Blake, did you see the GDP number overnight in Japan? I'd be like, who cares? You know, no one's looking at it. Because it is a funding currency. It's moving based on for different reasons. The euro, very similar situation, is I doubt it's going to move much based on economic data. It will, because we're in a transition period where, you know, where the euro is the funding currency of choice. And you have to imagine, if yields go up globally, I bet you in the Eurozone, they don't. Because the euro is the euro will continue to be the funding currency of choice. So therefore, the data that we see in the Eurozone is not going to be as effective moving the market. What's going to move the market regarding the euro is like what you'd see in the yen in years past, is you're going to see risk on or risk off, you know, be a pure driver of the euro, and probably be that way for the next several years. So it's going to take some time for the market to recalibrate that mentally. All right. So if now let's take a step back for a moment and let's talk where we're at in the S&P. So this is a monthly chart. Let's go over to a weekly chart. So here we are in a weekly chart of the S&P. Let's say the S&P does some quick, let's say Bernie Sanders gets the nod. Everybody thinks Bernie Sanders can somehow win the presidency. Speculative, yes. Can it happen? Probably not, but just humor me. And let's say, 3 months from now, we're like, oh my God, Bernie's going to potentially take the presidency, and the stock market does let's say a 15% correction from current levels, and we drop to, what am I looking at the S&P? Yeah. So we drop to 2,800. Okay. Now, that's not much of a correction based on where we've gone and what we've done. But let's say we do a 15% correction. So what do you think happens in the euro that's been beaten down like a, flogged horse? Well, the euro probably would rally, back up towards the 115 level. Is it because things in Europe got better all of a sudden? No, it's because it's a funding currency, and you get a lot of those trades will end up unwinding. It's the same thing, same dynamic we see in the dollar yen, because you could sit there and go, well, Blake, what's ever moved the yen in the last 20 years? Well, the yen has moved a lot, and a lot of these movements here. Now, this was Abe's, three-prong approach or whatever. But these moves, like this move lower in the dollar yen right here, and this move right here, post.com bubble, financial crisis, you can see how the yen has strengthened. So if you think the euro is immune to strengthening, I would very much argue that based on where the S&P is currently, we have a correction in the S&P. I think the euro could substantially rally. Again, are we going to 140? Probably not. But could we go to 112, 115? Maybe even higher, depending on some. Bernie Sanders wins the presidency. Oh, we're going to correct probably 30% in equities from current levels, at least. So the euro can stand to still gain from here. But I think that's what's going to be a primary driver moving forward. And it's not going to be economic data. And you saw it. I think we saw just a glimpse of it, and you have to look at recently. I mean, the PMIs have, been horrible. And, you look at the euro and you're like, wow, they're not getting any better. No, they're really not. And they haven't been for months. And as equities rally, I think the euro continues to sell off. If stocks continue to rally, yeah, I think the euro continues to sell off. If we get a reversal in the stock market, you're going to see the euro firm. How much it goes up is probably going to be very relative to how deep of a correction we see in equities. So for right now, what I'm really looking at in the euro is this 108.20, 108.30. If that is breached, that's probably going to coincide, in my opinion, with the S&P closing in on or breaking below 33.35 or wherever we were at yesterday. So that's what I would be watching regarding the euro. And the yen too. And again, I think the yen is changing its dynamics here. I think it's it's changing its stripes. So you gotta trade it a little bit differently. Okay. So FX Trader said, based on this logic, when the euro rallied 2017, 2018, S&P must have crashed, so it's not so good. No. This has really been more, the market has changed, and you've picked up hints and pieces over the last year on how people are trading the euro as a funding currency. Really, you see it mostly in the euro peso. And then you have to use the exaggerated pairs with the highest difference of carry to really gauge how the euro's going to act. And I think what we've seen over this last year of the euro peso has really demonstrated what a carry is. Every bank analysis that I read, especially over the last, last couple of, I would say last 6 months plus, it's all about the euro peso carry, because that's where in a yield starved world, that's the only place that people have been able to get yield carry in the currency market, peso pairs. And we've seen a big unwind over the last couple of days. This is one of those things that scares the heck out of me if you're long equities, this really big move. And in the US dollar Mexican peso, if you look at our analysis all week, every night I'm like, we're in a descending wedge, we're in a descending wedge, we're in a descending wedge. We're trying to form a descending wedge, and then last night we're broke out. Or the last 2 days it's been breakout central, and that has led to this big, huge reversal. Now, obviously, as I wrote this morning, we're going to stall here because this 19 level is a big level of resistance. But in order to get a foothold above 19, we're going to have to see equities lower. And if equities continue lower, that dollar Mexican peso is probably going to continue to squeeze back towards 1920. The challenge, this underside of this triangle, which is a big deal. Have you seen this chart before? I just want to ask, how many of you guys have seen this chart before? Pete says numerous times. I'll tell you. I'll tell you what chart that looks like. Is the dollar Canadian right here, right here. So watch, and speaking of the US dollar Canadian, watch the US dollar Canadian if we break above this trend line right here. That comes in at 133.30. Now we have the Canadian retail sales that are coming up in the next 8 minutes. The Canadian's held up pretty well, but it hasn't broken higher. There's a lot of options that expire right around here today. That doesn't mean it can't move. That means that's probably one of the reasons why it's been contained so well. What I am looking for is a move above 132.80. That is going to be the catalyst that drives the dollar Canadian higher post retail sales today. So that's what I'm going to be looking at today. Just ahead of the retail sales number. This is a pennant, so you can actually draw it more like that. It's a pennant. Doesn't mean it has to break higher. Just the propensity of the risk of it breaking higher is greater because the pullbacks have been shallow. We haven't even been able to hit a 38% retracement of this move. That's pretty shallow. And right here is just the 38% retracement of the last move. So if you think about that, and just from a Fibonacci standpoint, when you have a move and then it only retraces 38%, that is a kind of a platform for a continued rally, which if you can look at the bull flag pattern, it points to 135 on a breakout. So let's watch that data today. I think it's going to be pretty important. It might be the driver today because crude oil has been weak. The commodity currencies, like if you look at the Aussie, we're at lows we haven't seen since 2009. So in order for the Canadian to play a little catch up here and the dollar Canadian break out, we will have to see a weak retail sales number today, which we'll see if we can. So with that being said, I want to urge you guys and gals, if you're not part of the Forex analytics community, all this analysis that I pointed out, I mean, you can get all the basic technical analysis, even with the light plan. But if you want to be in the community, in chatting with myself and the rest of the traders, make sure you take advantage of the premium plan. It is only $1 for 10 days to try it out, and then after that, we have our two different tiers of pricing. So make sure you try us out, and obviously visit our webinar sponsor, Forest Park FX. They're the ones that make this webinar possible for you guys. So make sure you scratch their back and reach out to them, especially with any brokerage firm needs that you may have, because they're going to be best suited to find you a broker that fits your needs. All right, Dale, Steve, and Stelios, good morning, gentlemen.
Good morning.
Good morning.
Good morning, guys. So we have Canadian retail sales today, and that's not the only thing we've got going on today. We have Canadian retail sales, but we also have
PMIs and housing data from
what's
US.
that?
PMIs and housing data from the US.
We have PMIs a little bit later, housing data. So we have a lot of Fed speakers today. So so it still may be some movement today, and the dollar Canadian is going to be in the spotlight here in the next 5 minutes. So what do you guys think about these coronavirus cases? They look like they're kind of accelerating outside of China, and that's the scary thing.
Yes,
Yeah.
that's what I was saying for days now. I was thinking,
Yeah, that
look,
Chinese data, who cares about them? They're manipulated. We're going to find out what's happening when we see outside China what's happening.
Yeah, so it's starting to. I think it's starting to garner the attention of the market, and yeah, I mean, you have a country that has come to a screeching halt, and that's scary, obviously. So, well, guys, I'm going to let you guys talk about it. I'm going to jet on out of here. I got to get to the markets. Have a great weekend. Thanks, everybody. I'll see you on the week ahead video on Sunday. You guys all have a great one.
Thank you, Blake.
Thanks, guys.
I have to admit, I am, like our friend Pete says, it's very scary, this virus, and the way it, the incubation period, the way it spreads. We got new cases outside of China. I was reading about Israel and Italy and whatever, So I personally don't think it's over. I've said this for days. I hope I'm really wrong, but
You're not.
It's really scary for me. Okay, before the numbers come in, we've got 3 minutes, so a couple of things I can mention. We had today, interestingly, PMIs out of Europe and UK. Manufacturing PMI in particular was higher than expected. Everybody was cheering, but there is always, you have to look at the details. I was reading that the way PMIs are calculated is that if supplier delivery times worsen, PMI goes higher. And that's because, if you have a supplier whose times get worse, which means it takes more time for stuff to get to you, it means that there's more demand than there is supply. So that's good for the economy, right? So it's good for the PMIs, etc. Well, actually, so delivery times are now dropping. Are getting worse not because of more demand, but because supply isn't there, because of China, because of everything. So, people have been mentioning that, look, the PMI, the manufacturing PMI has jumped, but over half of this jump is due to this, which is not a positive thing. So, as with every number, you got to be careful. You look at the headline number, but you try to understand what's driving it. And in this particular case,
and very few people are looking at the breakdown in numbers in general.
Yeah, I mean,
because sometimes headline numbers for various reasons might look decent, and when you dive deep into them, they don't look that good at all, or the opposite can happen as well.
Yeah, and the algos who trade in nanoseconds, they read the
yeah,
number
they
and
just see
the
they just see the headline number and boom.
Yes. So we had that. We had services PMI, which was slightly better as well, both in the Eurozone and in the UK. And the UK in particular, both readings well above 50. So, not the disaster that people have been expecting. We're still facing, I think, a lot of uncertainty going into the year end, because the Europeans and the British still seem to be a long way away from agreeing anything. From fishing waters to legal jurisdictions to all sorts of stuff. The Europeans want to continue having access and to essentially not change anything. And the people from the UK are saying, look, we're out of the EU because we want to take control. So it's still a lot of sticking points, and that's why I think, and I've said this yesterday and the day before, I think the pound may see some difficulty in the coming months as we go forward towards a year-end deadline, and as no progress is being made. I still think that there will be some kind of agreement in the end, but how it happened last year. I think we're probably going to have a grind just like last year before another big leg higher for the pound. That's just my view for now. Okay, let's have a look at the data. You have your dollar CAD. Yes, good. And see what that brings. I think Blake was saying that historically December Canadian retail sales is weak, right?
Let's
That's
see.
what we're saying. So
We're
0.4%
gonna find out any
expected
second.
in core retail sales. Actually, no. Retail sales marginally worse, core retail sales marginally better,
Yeah.
non-event.
So
Non-event.
yeah.
Revisions slightly better.
Revisions though are
Yeah.
decently better.
Yes.
So overall, I would have to say a neutral to slightly positive print,
Yes.
considering the revisions as well.
Yes. Yes.
And from what it seems, USD CAD couldn't care less. It has
Yes.
moved something like 2-3 pips.
I think this trend line will be broken only if the dollar just has another big leg higher. I think Canadian now is going to be at least for the next, for this.
You know, I have full faith in this market to get more retarded. So that means I have full faith that we're going to see higher levels in indices and higher dollar before things start going really south. So I still think, Stelio, that USD CAD is probably one of the best places to be if you're looking for more dollar strength. I think looking for more dollar strength, especially if we're talking about the DXY, was more or less of a given once we saw that this move lower really stalled, and up to that point there was nothing impulsive to it, and then we broke through that and really went vertical. So we're seeing a little bit of a pullback from an area. If you remember, I mentioned, what was it, yesterday or the day before, that I'm expecting a pullback anywhere between here and 100.5. So we might be getting that pullback happening from here, but that doesn't mean that the dollar is done moving higher for now. I do believe that dollar is moving in the totally wrong direction, having to do with fundamentals, and I do believe that looking back in a few years from now, everybody's going to be like, oh, how was the dollar up at 100 again? But this is what we currently have, and you have to respect the technical picture. The technical picture shows that the dollar remains well bid for now. I don't expect the dollar to really go ballistic, meaning I believe that the move higher is going to continue being more or less of a grind, as it was in the past few years. So I don't think there is real value in being long the dollar across the board and thinking that you're going to make a killing, because I don't think that's going to be the case. But on the other hand, I think that the dollar, until proven otherwise, will remain resilient until the whole dynamic changes.
Makes sense. Makes sense.
Getting close.
Yeah. What else did I want to say? Okay, one last thing. Eurozone CPI 1.4% year on year, exactly as expected.
Yeah. CPI data from Europe came exactly in line. Everything.
Italian inflation 0.1 worse. Really, nothing that's going to change anything either way. So.
With yields, guys, the market hasn't picked up on the narrative that rates are falling at a much faster rate here in the U.S. than they are in Europe when you look at the Bund, which is really a different story than what we had going for the last few years.
By the way, I think
been a shift there.
I think that there is nobody that has been listening into us and didn't really expect the breakout in bonds to the upside, or the breakdown in yields to the downside. I mean, last week we said again that after breaking through this formation, we seem to be forming a triangle which should break again in the direction of the prior trend, which is lower. And as I've said, having to do with 10-year yields in the US, I think that there's a nice magnet here in this confluence of extensions, roughly at 125. So I do think that we're going to see the 10-year yield approaching or even testing the 1.25%. Now, if you ask me, it's ridiculous, but with all the central bank market manipulation, in essence, yields have become ridiculous in general. I mean, Greece now, borrows money for 1%, which, if you think about it, just wants you go nuts. We're talking about a country that was in the brink of a disaster and complete economic collapse during the previous decade, and now the market is more than happy to lend money to Greece or Italy, for example, for getting back 1%, which is obviously below inflation.
Steve, Greece has issued notes, short-term notes, like I think 6 months at a negative rate. So there you go. you pay Greeks to borrow money. That's really never a good decision.
Yeah, which is just silly.
Yeah.
But this whole market environment has become, it goes from stupid to silly and from silly to ridiculous. And when you say that it can't get any worse, it gets worse. But everything has an expiration date. And even this madness will end up, of course, having an expiration date. And in retrospect, everybody's going to be afterwards, of course. I mean, of course it blew up. I mean, it made no sense, for example, X borrowing for that much, Y borrowing for that much, etc., etc. But in retrospect, everybody's like a magician, that everybody knew what would happen. But in some magical ways, people keep investing in in a very stupid way. Regardless, here's the 30-year, by the way, and worth noting here, the 30-year yield is below 2%. So you are going to lend for 30 years your money to the US to get back less when what the reported inflation is, and that says enough. Not to even consider risks to inflation if we're talking about a 30-year period, right?
It's crazy. And to think that in the US, they can actually lock mortgages, fixed rate mortgages for like 30 years, can't they? Which is obviously linked to the 30-year yield. And I mean, if I was looking to buy or something, you can get a 30-year mortgage for what, 2% or 2.5% or 3% or whatever it is above.
I think it's like something 3% or something. Yeah,
incredible.
Yeah, which is, I'm pretty sure that your mortgage is going to end up paying itself, especially with what's coming.
Yeah.
Okay, let's go through some of the questions. I wanted to mention yields because we didn't mention them yesterday. Now, since yesterday, we had this big dump in stocks. I actually was very lucky yesterday with stocks. I went at some point in the chat room. I said that I'm shorting half a position in this market, and the market was still unchanged on the day. We were almost at 3,390, and like literally 30 minutes afterwards, the market dumped lower. I have no idea what the catalyst was. I just, I was looking to, to take advantage of the fact that we're getting close to the 161.8% extension. That's why I only shorted half, because I wanted to keep some dry powder to short a little bit more at 3,400 if we made it there. We didn't. I still have my half position. Actually, I haven't closed it. I just have moved my stop loss above yesterday's high, so I'm in essence risking like barely like 5 handles. I think we might see a little bit of a more downside. Now, let me make it clear. I'm not looking for an all-time high forming here or whatever. I just wanted to play, the fact that we were getting close to a very important fib extension, and the fact that we haven't seen any reaction lower. I mean, the S&P keeps diverging from anything that it was traditionally correlated with. We're getting negative headlines. It couldn't care less. Bonds are moving higher. Yields are moving lower. It couldn't care less. Coronavirus seems to be getting worse instead of better over time. S&P doesn't care, couldn't care less about that either. So, I believe that at some point we're going to get like some kind of a catalyst, and at least, do like a 2-3% move lower, close to the 161.8. So, I'm looking for a short-term trade here, nothing more than that, to make it very clear. Let's have a look at the DAX as well. And the reason is this. because the DAX is still getting rejected from this trend line resistance. So DAX got rejected after testing yesterday the 127% extension of this correction lower, still respecting that trend line resistance as well. Now, in order for DAX to open up more downside, I would want to see a move below 13,500. And since I didn't mention that, in order for me to believe that we can open up a lot more downside in the S&P, I would be looking for a break below 3,330. So above 3,330, we haven't really done anything because we haven't even broken down from the first horizontal support area. So really nothing to write home about. And the way stocks recovered yesterday from the lows, once again it shows that this market is like really, really well bid. Now, reasons don't really matter because you don't get some kind of a price if if the market goes up, for example, for the wrong reasons and you're short, you're still going to be losing money. So what gets rewarded in the market being in the right side is being in the right side, and the rest unfortunately is just reasons for us to have interesting discussions, but nothing more than that. Now the Aussie is still in breakdown territory, undoubtedly. So Aussie, Kiwi remain under pressure. There's no question about it. Aussie yen, Kiwi yen remaining in consolidation. So I want to see what's going to happen with them. Here is the Aussie yen. Here's the Kiwi yen. Especially the Kiwi yen, I think is has a very, very clear formation here. I definitely favor the breakdown from here. Even the RSI profile, the way we have moved from oversold territory to neutral, without price having really done anything, I like it. I mean, it looks good for a breakdown, but obviously, in order for me to go on board, and I'm probably going to be getting on board this train, is by seeing a daily close below 70. Daily close below 70, in my opinion, opens a lot more downside in the Kiwi yen, and it's one of the pairs that I'm currently monitoring because I'm interested in participating. Now, gold and silver are, especially gold, unstoppable. No surprise there. I mean, we've told you like 100 times here that this was a textbook triangle and eventual breakout from that. If you remember, I had clearly stated that my first target was 1625, and because it was this extension, which I've now deleted, it was the 161.8 of that extension. And my second target was the 161.8 of this extension, which is at 1658. Okay, so already gone through my first target and on our way to the second. What can I say? I remain bullish gold. There's no question about it. I actually remember a story when Blake was talking earlier. I've told you I have gold coins. I like to have exposure in gold through physical metal because I really don't trust that much, the financial markets having to do with, holding gold. And there's no reason. I mean, gold is very valuable per ounce. So you can really have a decent amount by, not having to store like something huge. So, a few years ago in 2016, I had a good friend of mine that was getting married, and you traditionally you give gifts or buy them things, or even give them money so they can buy whatever they want. So since it's a good friend of mine, I gave him for his marriage like 2 gold coins, which I very rarely do. I don't really, I like to hold gold and not give it away. But it was a very good friend of mine. So he was like, "Oh, dude, you shouldn't have done that. How much does this cost?" And what I told him is, back then I think gold was something like 1.1k dollars per ounce, and in euros it was even even lower in comparison to what it is today. I mean, because the appreciation in euros has become even more profound. So I told him, don't ask me how much it costs today. ask me again in a few years. So he listened to me, and he kept them. So yeah, I mean, today they cost something like 70%, 80% more than they costed back then in euro terms. Yeah, Ziggy, that's very traditional here as well. To grandchildren, of course. Yeah, I mean, if all goes well, I'll never have to use gold, and I'm going to pass it on to my son, and hopefully he's going to pass it on. And at some point, gold is probably, if they continue with the monetary policy and the fiat currency devaluation, at some point gold is going to be worth 6 digits per ounce. Now that's going to take, of course, many years, but with all the fiat currency distraction that's going on around, I think at some point it's going to be worth like 6 digits. Unfortunately, don't get confused, gold is just an instrument to preserve buying power. So it's not coincidental that more or less what you could buy with gold 100 years ago, you can buy today with the same amount, with the same amount of gold. Okay, because in essence, gold isn't really something that is and in a short-term investment. It's just something that guarantees you that your money doesn't lose value over time. But in under the current environment, that's extremely important and valuable. So gold on its way to the next target, and after that, it's the 78.6% fib from the all-time high, which is at 1733. So these are the next upside targets. Silver obviously has also broken above this triangle, and the next stop is a retest of the previous high at 1960 something. Clearly, silver is diverging from gold in the sense that gold is, at multi-year highs, while silver hasn't made it to multi-year highs yet. So between the two of them, gold remains, better bid. Dale did mention the gold-silver ratio, and I do agree that the gold-silver ratio has a good chance of turning lower once again, because I do see this move higher being corrective in nature. I mean, it's slow, it's overlapping. You can see it here. So, I would favor an eventual breakdown, from this triangle and the push to new lows, which if that's the case, you should expect metals to continue, both of these monetary precious metals to continue doing, very well. Clearly, we've stalled in momentum here, but I would want to see a breakdown from this trend line to feel even more comfortable. Now, copper, and I wanted to mention that, copper is attempting to break down from here. I mean, if you remember, I said that this formation looks corrective to me, and I would expect a continuation lower. Yesterday, it actually closed below it. Today, it was suffering earlier. It has now pared back all the earlier losses, but it's still trading below this formation. So I do think that copper can actually, keep pushing lower. And here is also palladium. So far, palladium consolidating an inside day to an inside day. Obviously, we need more evidence to assume that, this was a high, but I'm looking for palladium to form sooner rather than later a formidable high, one that is going to lead to a much deeper correction, because as I was saying, usually moves out of a triangle are terminal. So I expect that either from, we might have even seen the high here at 2,840. We might need to consolidate a little bit, perhaps make one more move to the upside and then break down. But I would expect this to break down sooner rather than later. Having to do with crude, yesterday we had this conversation in the chat room. We actually have a member in the chat room that was short crude, and he was getting a little bit worried at the highs of the day yesterday when we were above 54. I told him that, don't worry really that much about it. I do think that crude is going to get rejected as long as we are below 55 and a half. I think that crude, has a big chance of actually turning lower, and I still think that crude can break down from here and move towards 47 and a half. But in any case, as I told him, I was expecting crude. His position was his cost average was at somewhere like just below 54. I told him that I think the market is going to give him the ability at worst case scenario to bail out at 52 and a half. Today actually we made it to 52 and a half. Previous highs here. You have to go down to the 4-hour chart actually to see that more clearly. Let me pull it up here. There we go. So to go to 52 and this is a weekly. Let me bring the 4-hour. Here it is. There it is. So here is the 4-hour chart, and here is the area I was expecting that we can retest as support. So let's see what happens from here. I think that if we break down from here, we'll be on our way to lower levels. Let's see about questions. Platinum. Question about platinum. Okay, I covered everything else from the metal, so I might as well visit this as well. So here's platinum. So platinum did find support at 950, 955, as we were saying, but on the other hand, found resistance once again here at 1020, 1025, that resistance area. So for the time being, it's still consolidating between these two levels, right? So, until something happens, more of a range trading here. I think that being long against 950 is always going to be a good proposition as long as we stay above it. On the other hand, if you want to look for upside targets, look no further than this ascending channel. Resistance currently passing from 1060. Steve, I have started shorting USD since yesterday against Euro and SEK. Feel that Blake's view of funding currency-related issues, plus the Fed being the only game in town to cut rates, suggests USD has peaked. I don't know if USD has peaked because USD can really keep on grinding higher, but I do know that you shorted at a nice level, at least for a short-term pullback, because the DXY is testing this channel as resistance. USD SEK, as I was showing, I don't remember if it was yesterday or the day before yesterday. It was one of the two. USD SEK was also testing confluence of resistances. If you remember, somebody had asked me on the webinar, I don't remember, as I said, if it was yesterday or the day before, if it's a good area to short USD SEK. And I said that, listen, at least for short-term pullback, it's a very good area because we have a triple confluence of resistances, 78.6 from the high, ascending channel, trend line resistance, and horizontal resistance area. And as you see, today, we seem to be forming a very nice daily reversal here on as a candlestick, right? So, quite a nice reaction from this area. Yesterday, we got rejected from that area as well. I mean, from the highs of the day, we actually pulled back roughly 50%. Today, we attempted once again to start higher today, and now we seem to be breaking down. So, especially you're shorting the USD SEK, I think you have a very good entry area if you shorted it yesterday. So I would definitely hold on to that for at least a few days. And more or less the same applies to the euro, because if you remember, I kept saying that I like this confluence of supports as a reaction level for the euro, the 127% extension of the last rebound, also horizontal support resistance area if you zoom out. So I don't know if this is going to be a significant high for the dollar. I'm actually assuming it's not, as I was saying earlier in the webinar. But I do know that at least for a short-term trade, you got yourself finding nice entries in the market. So I would hold on a little bit longer to these trades. I think you can definitely make some money here, even if this proves to be a counter trend trade for the time being. Dale, I agree with you. Bunds underperforming treasuries. USD 10-year spread over Germany, the lowest forever. USD the highest versus euro forever. And short euro positioning, once again, totally elevated. I see massive pain for the USD ahead as Fed expectations for 8 cuts increase. Yes, I do agree, Gautam, as a medium-term read and as a very short-term read, as I was just saying. But I'm unconvinced that this is like the high for the dollar. I do agree that it's a good short-term trade here because both the DXY and the euro are testing significant areas of resistance / support. But I wouldn't be surprised to see this market ending up grinding even higher, having to do with the dollar, or lower, having to do with the euro. But as I've been saying for a long time, I do think that if you're looking or talking about a longer term horizon, being short the euro against the dollar or being long the dollar is going to be like trying to collect pennies in front of an upcoming train, because I do believe that despite dollar being able to strengthen even further slowly, I do believe that the next big move, whenever that comes, is not going to be to the upside. It's going to be to the downside for the dollar. Of course, that might take months or even a year to manifest, right? So, I mean, this is not a thesis or an or a suggestion for trading right here, right now, right? Just not to get confused. Coronavirus patient rehospitalized in China's Chengdu after testing positive again. Oh, not the luckiest guy out there, obviously. Euro-dollar futures, and is that what you're giving me a ticker name? I'm assuming it is. Yep, it is. Not much to say here. I mean, I bet that you can see what I'm seeing, right? Textbook. Triangle, breakout, retest, expect higher. I mean, from a technical perspective, it couldn't be more clear than this. Also, that comes from a bigger textbook breakout from another corrective formation, a longer term corrective formation, and another one. So this remains a bullish market, no question about it. You can see it. Up, ABC, up, a little bit more complex, but definitely corrective move. You can see from the overlapping and slow nature, up, horizontal consolidation, a triangle, up again. What about MIB? That's the Italian stock market, for those that don't know. We're going to check it out. Oil lower, better chance for USD CAD to finally break out. Yep, that's a valid point, Pete. No disagreement with you there. Higher above the stubborn 133.50. Yeah, 133.20, 133.30 to be exact. And as I told you, if we do break through that, I'm looking for 135.50 to come sooner rather than later. Now, having to do with the question about MIB, haven't checked that in quite some time, but sorry. But we can do it together. No, that's not it. That's Mitsubishi Logistics. Interesting. Isn't MIB the Italian stock index, or am I getting confused? Give me some feedback, please. Perhaps it's a different ticker, because I'm pretty sure you don't want to have a look at Mitsubishi Logistics. Anyhow, by the way, here's NASDAQ as well. Yesterday, and the reason I wanted to mention NASDAQ is because yesterday We had ETA 40. Yeah. Thank you. MIB is though the index, right? Yeah, Stavro. Yeah, FTSE MIB. Yeah, thank you. Okay, so I remembered correctly. I'll go to it. Give me a second. I just wanted to mention that yesterday's reversal in the Nasdaq was technically more significant than the one in the S&P, because first of all, we had a key reversal day, an outside black candle, exactly at the 227% extension of the last corrective move lower. So I just wanted to mention that. Now let's have a look at, okay, we can have a look at the CFD, which is ETA 40. Something tells me that you should pay attention to this resistance, trend line resistance, which seems to be working for now. And another comment here, which is the following. Let me draw here. Let me get a drawing tool. What do you see here? Is this an impulse? No, this is not an impulse. So long term, I expect this whole structure to fail miserably. Okay, so if you look shorter term, if you zoom in, you're going to be, if you zoom into this period, you're going to be like, whoa, what a nice healthy uptrend. But that's why you always have to have the big picture in mind. The big picture shows that this is not an impulsively bullish market. This is actually a big correction that's going to fail miserably sooner rather than later. And I would expect failure to even bring it potentially back to 5 digits. Sorry, to 4-digit numbers below 10,000. Okay. More history on FTSE MIB. So let's have a look if I'm right or not. Let me load it. First of all, let me get rid. Clear all drawings. Closing this. FTSE MIB. You see? You see? So you don't need to be a scientist here. Which of the two is the impulse? This one or this one?
Yeah.
Just look at the lines. Just look at the angle of the lines, right?
Terrible recovery compared to us from the financial crisis.
Yeah. So
don't make FTSE your tootsie.
So as I told you before, I expect this to fail very, very miserably and bring us back to 4 digits. Okay, so don't be the one collecting pennies in front of the train, right?
FTSE, be mine. FTSE, don't cry. You didn't know I was on vaudeville days.
Should I assume that since it's a Friday, we don't have an interview today?
You can assume that almost every Friday, except for when we have a special situation.
Okay,
yeah, so,
cool.
So, yeah, that's it for the week. And you guys know how I feel about Friday being a great day to sign up and take the whole weekend. We've laid it all on the court for you guys. The way to say thank you is join us. Invest a few of those pips that I know we helped you make and face. Okay, so everyone, remember, don't just count your pips, count your blessings. Have a great weekend. I have a lineup, Matt Weller. Actually, I have Wednesday open. It's Ash Wednesday, ashes to ashes, dust to dust. So if you've blown up an account and you want to be interviewed and talk about how you made a comeback after that, and you don't even have to be a subscriber, and we learn from everybody. If you're interested in being interviewed by me on Wednesday, just let the support know. And we love to have people that are part of our community. Haven't had anybody in a while, so they could talk about the good, the bad, and the ugly of Forex analytics. So, you know, a lot of people fear public speaking as much as death. How about you, Monica? How about you, Brock? You guys that talk to us, texting, how about using your voice? What do you think? Well, think about it over the weekend. You can't, why? Because you're shy, Monica?
Sleep
You
over
don't-
it.
Yeah, sleep on it. You don't have to use the webcam. So, you know, you don't have to worry about that. Anyway, so have a great weekend, everybody. Steve, have a great weekend.
Same to you, coach, and everybody else.
Yeah, so that's it. That's a wrap. And we'll see everyone Monday. Full week next week. All right. You're welcome, A. Mockton. Cheers, Guatam. All right, Steve. Could shut it down, bro.
Your host. Oh, sorry. No, you're not. Actually, I'm
Yeah,
gonna
you
do it.
have
Don't
the
worry about it.
screen, Yeah.
Yeah,
Okay.
yeah. Bye
All
bye.
right. Adios, everyone.